Okay, we're 4 minutes into market open. It's Tuesday. Trading NQ and we're still downtrending very clearly. And then on the 1 day, we enter that bearish gap and then ended up taking out last week's low yesterday. But now we are resting right above this 1 day bullish gap. So we have some sell side liquidity right there. And then for our buy side, we have this 4 hour bearish gap right here, and then a 1 hour gap right here. Marked London highs, London lows. Right now we just touched London low. And then somewhat of an S&T divergence. I don't love how it looks, but NQ has taken out this Thursday, July 23rd low. And also NQ has taken out last week's low, whereas ES hasn't. So somewhat of an SMT. I'm predicting that if we're still downtrending, price might want to pull back up, enter this buy side liquidity, and then continue in the dominant trend direction, maybe something like that. But we could very well respect this 1 day bullish gap and then look for longs, like temporary longs. The reason why I don't think it's long term, again, it could be, but because for this, here, we'll see it better on the 1 day. From the start of this uptrend to the bottom, so start of the uptrend to when we started pulling back, I set up Fibonacci, and you don't want to necessarily take a trade because of the Fib tool, but it's just, it helps you see where price is in relation to like the discount zone. And that discount zone is the 50% and 61.8% range, which price is still, 750 to 800 points away from. So we're 800 points away from the discount zone, which is why I think that we still want to pull back down. And in regards to this 1 day gap, we could reject off of it and then continue buy side, or we could just fill the inefficiency entirely, which is a lot of times what the market will just do. So those are our options. Right now, I'm just waiting for a clear manipulation in price. Always, every morning, market open, we'll see AMD play out, and AMD is just accumulation, which will happen in pre-market up until 10 a.m. I've seen it, where price will kind of consolidate, generate like a block of price, which then we will manipulate the sell side or buy side of, and then for distribution, we'll distribute in either the same direction as manipulation or the opposite. So I would kind of consider this our accumulation, and then hypothetically, if we manipulated the buy side here and then distributed sell side, that is an option. Or I could even look for like, this is our accumulation, we manipulate the sell side and then we distribute buy side. Or it could even be we manipulate sell side and then we distribute sell side as well. So those are kind of our options right there. Definitely waiting to enter a high time frame confluence first. We could have a potential SMT right here, which in that case, if NQ ends up taking out this 2 a.m. low right here, and ES doesn't, which looks pretty likely, then we will have a bullish SMT. And then once we have that bullish SMT, that'll generate temporary bullish movement, which we can then enter that 1 hour bearish gap and then continue short. Those are one of our 3 options right there. So we just took out the low. Trying to see if maybe we're going to leave behind something on the low time frame, and we might just have to take a continuation trade short. But I don't see anything yet. So I'll resume once price confirms something to us. This past month, trades have only been happening after 10 a.m. I think maybe only 1 or 2 days was like a market open trade, but nothing in between, nothing at like 9:45 a.m. The main trades I've been seeing are happening after 10 a.m., which kind of sucks because if it happens too late, like if it's close to 11 a.m., then it's lower liquidity and then you're close to like the afternoon chop and you don't want to get in on that. So I'll resume once we kind of reject off of a clear level. Okay, we have a rejection. I like this candle right here on the 5-minute. The only issue with this is, it's actually not even an issue. we might be able to take a long position. Because if I'm waiting for the 15-minute time frame, like 15-minute time frame guaranteed, when these 9 minutes finish, it's going to create a fair value gap. No matter where this candle body finishes, unless it closes all the way down here, which I don't think so after looking at this 5-minute candle right here. If it closes somewhere from this wick above, that's the fair value gap on the 15-minute. So for me to inverse that fair value gap, I'm going to have a candle body on the next 15 minutes. So at 10:15 a.m., close above the body of this second candle, the open of this bearish candle right here. The trade's practically over by then if we're looking for a target of, let's say, these highs or London highs. So what I'm gonna have to look for is a 5-minute inverse, and you can kind of tell if it's worth taking the 5-minute over the 15-minute, even though 15 minutes is going to show you a gap based on the candle. And I like this candle right here. And not only that, we have an S&T divergence in relation to this low right here. Like NQ has taken out this Tuesday, July 28th low, whereas honestly, so has ES. ES has taken it out as well. Yeah, it has. It has. So maybe no SMT, but we have to remember that there's still a large one in relation to this low right here. So there's some opportunity there. Tricky to say. I would say once 10 a.m. hits, if this candle body is down here, that would be a clear continuation sequence. We're looking for shorts at that point. We'll have a large 1-hour bearish candle, and then we're just going to have to look for a 15-minute or like a continuation trade for shorts, which we might look for an entry on the 5-minute, maybe the 15-minute. We'll have to see, but it's all dependent on this 15-minute candle right here. Truly, that's what it depends on. I only got this 5 minutes. So I'm going to stay on the 5-minute. In 2 minutes, I want to see where this candle body finishes. My prediction is we're not going to close above this, and we're going to allow for the next 2 5-minute ones to end, or the next just 1 5-minute time frame to end before 10 a.m. And then that will kind of decide market direction. Okay, it's about to be 10 a.m. Clear continuation. We'll have a massive 1-hour bearish candle, right? So bias is bearish. There's absolutely no need to look for longs, even though we're in this 1-day bullish gap, because we'll just fill the entire gap, right? That's what we're going to want to do. Now, in terms of entries, we have 2 options. We could retrace all the way into this breaker block right here, sweeping London low, entering this inverse fair value gap right here, somewhere in this level, and then continue bearish. Or we could sweep just this intermediate low, which you'll see on the 5-minute, you'll see it on the 3-minute, and you'll see it on the 2-minute. And there's just what that means is there's a bearish gap on the 2-minute, 3-minute, 5-minute, and we have a wick that has entered all of those bearish gaps. So if we just take that wick out while staying within the bearish fair value gap, that could generate enough liquidity to continue in the dominant trend direction. So that's what I'm waiting for. It's about to be 10 a.m. in 5 seconds. So let's kind of see what we got. Yeah, I like this too. Here's another thing. We have a 1-minute bullish SMT. This is how I know that we're looking for shorts. This 1-minute bullish SMT is going to be used as a temporary pullback for price. ES has not taken out this low right here, this 9:45 a.m. low. So we have a bullish SMT. Probably take out one of these levels. Definitely retrace right here, or a little more discount up here, and then we'll continue bearish. I think we can get a good trade in. This SMT is kind of confirming to me that we have opportunity. Price will pull back up and allow a retracement entry. If it wasn't there, then I could have been like, I don't even know if we'll retrace into one of these key levels. We're probably just too high of a liquidity and continue bearish. So let's see. I'll resume once we take out one of those levels. Okay, so we have 2 options, right? 1048 just took out this intermediate high right here, which is good because now we have a 30-minute bearish fair value gap as well. So 30-minute bearish, 15-minute bearish, 5-minute intermediate, 3-minute, 2-minute, and 1-minute intermediate high. SMT divergence prior to this, ES kind of made an ascending market structure. Well, NQ is descending. The only thing I would argue is, which I'll know, is if for some reason at this level where price is currently at, after sweeping this intermediate being in that 30-minute bearish, we somehow reject, which we will, I'm very confident that there will be some rejection at this breaker block, at London lows, or in this fair value gap. Once we pull back, if I don't see confirmation on the pullback, meaning if I don't see us invert a very low time frame bullish fair value gap, proving it invalid and that sellers have taken control, if I don't see that market structure on the low time frame, right, us inverting that, then I think that we're going to sweep this sell side liquidity, entering this 5-minute bullish fair value gap, and then continuing long. Not only is it a 5-minute bearish, it's also a 3-minute bearish, and yeah, so a 3 and 5-minute bearish fair value gap that I think that we could possibly, I think there's a chance that we sweep that after taking out these lows, this resistance right here, this sell side ascending liquidity, entering that 3-minute bullish, and then if we do that, then this break, this intermediate, a candle like breaking through that would be considered our change of character and us now flipping market structure into bullish. There's a chance, and that chance I'll know is actually taking effect if there is no confirmation at this level, if we don't invert a low time frame fair value gap. If we do, then I know I'm still good for shorts. But if not, and we pull all the way down here, I'm ready to take longs. So I think today we will take a trade. I just hope that it doesn't take too long. I want to enter before like 11:15, 11:20. Definitely be out before 12 p.m. So I'll wait for confirmation and then I'll enter. But I like what we're doing right here, entering that 3-minute bearish, about to take out London lows, entering that breaker block. I think retracing 50% of the way through, 50% of the way through the 30-minute bearish fair value gap and 15-minute. And now I'm just looking for a low time frame confirmation. So once we do that, I'll resume. Okay, so we have a 5-minute bullish fair value gap that I think we're ready to invert. There's a chance that we wick up a little bit higher, but we've already swept the London lows. We've entered that breaker block territory. We filled the 30-minute and 15-minute bearish fair value gap. The second I see this candle body close below this, I am taking my short position. Second I see it close below this, that means that we have inverted that 5-minute bullish and we should be good to go. Okay, 11:05, 4 minutes. We're gonna have to wait for this 4-minute candle. So we've already kind of broken from this low, but remember, I need a candle body finishing, because for all I know, exactly as it's happening right now, we could break that low, but then this candle body on the bullish after these 4 minutes are done could end up here, and that's us essentially respecting this bullish inefficiency. I need a candle body close perfectly invalidating the short position. If I see the candle body on this 5-minute close above this right here, then I'm comfortable in taking longs as well. Reason why? Actually, you know what? No, we're looking for shorts today. We haven't retraced back into a nice discount zone, so I need a candle body closing below this. If it's not shorts, we're not taking the trade. This is perfect. I like this. Sweep of intermediate, entering breaker block, taking out London lows, 30-minute, 15-minute bearish for value gap entry. Even if we push higher, we're still in that 30-minute gap, so it doesn't make sense to take longs, right? You're having a trade in the opposite direction. I mean, when confluences are contradicting it. So just waiting 2 minutes and 45 seconds for this candle body to finish, hopefully closing below this candle right here, and that is us perfectly inverting this 5-minute gap. Let's just define our risk right now. Let's say we have a candle body close down here. That's 150 points. 150 times 2 is 300. 500 divided by 300, a little bit under 2. It's about, I mean, 1.5, right? So we might just have to trade one micro, and then I will add I'll add a position if we pull back a little bit, but we're gonna just do one micro. Two couldn't hurt. Let's see. I'll see. I'll wait for the 2 minutes and then we'll enter. Okay, so price is pushing. Things short. Opportunity is done. Unfortunately, we did not inverse this 5-minute bullish gap. And then if I wanted to enter a continuation trade, it didn't really make sense to. We didn't retrace back into a low time frame key level for me to enter a trade. And it didn't make sense to me to go short when we had this massive 1-hour bearish candle and still in that 50%, 60% range after we broke this high again. So today's a no trade day as well. 2 days in a row not trading, but the good thing is we're preserving capital. If I entered short here, would have lost. If I entered longs up here, would have been low risk to reward, and we're so close to 12 p.m. Now we're in a lower liquidity session. So I'm happy with preserving these last 2 days, and we've got 3 days left.